Good afternoon, guys. It's Workin, bringing you a very quick update on Bitcoin. Hope you guys are having a wonderful afternoon. We're looking at Bitcoin at the US dollar 4-hour chart on Coinbase. And last time we spoke, guys, Bitcoin had broken down. We wicked below this zone. I told you guys that this zone here, 5450, the bottom of this zone had to hold. I said, we can peek through it here with just a wick. That's no problem. But I don't want to see a decisive break, and we have not seen a decisive break. We had a candle close, but we have not had a 4-hour candle open and close below this 5450. And so as of now, guys, it's been consolidating back into this zone, at least on Coinbase. On some other exchanges, it's even higher than this. I think on Bitfinex, it sits at about $100 higher. But nonetheless, we are still well within this zone. And of course, we are continuing to make a series of lower highs and higher lows. And anytime we see that, guys, what do we expect? We expect another major move to come. Well, relatively speaking, not major in this sense, although that's possible, but another major move to come. We're either going to go reverse course here, or we're going to see a major breakdown. Now, I think there's a good probability that we might see a bull trap. What do I mean by that? I think that right now, if we come over here and we look at shorts are falling off the board. So in other words, shorts are starting to take profit, which is a sign of a healthy market. Retail investors are taking profit. That's a good sign, guys. If we come over here and we look at longs are starting to stack, and they have been stacking, not starting, they have been stacking. Longs are outpacing shorts fairly significantly right now. So that means, of course, as you guys know, this is a zero-sum game. For someone to make money, someone has to lose money. So which direction do you think market makers have to bring price to liquidate those long positions? Obviously, they have to bring price down to liquidate those long positions. So I think what may happen here, I think there's a good chance that price breaks up. If it does, we're going to be watching the top of this zone at about 57.75. Why are we going to watch 57.75? I think that's going to be an area for a possible bull trap. So in other words, price breaks up, people start entering even more long positions, thinking that this is it. Price is taking off again. Trap people into those long positions, and then they just they liquidate those longs by bringing price right back down. I think that's a real possibility. It doesn't mean that's going to happen. And they may even liquidate some shorts doing that as well. So it'd be a kind of a twofer from market makers, and then they bring price right back down. That's a real possibility. Doesn't mean it's going to happen, but it's a real possibility. Why 57.75? Well, I've showed you guys many times in the past. If we look back here, the top of that zone here has acted as a very either support or resistance. Many time in the past, acted as resistance here, broke back down, came. Let me go to the 4-hour. You guys can see a little bit better. This is going all the way back to the end of last year when this zone was created. We can see that it acted as again resistance here, broke down, came up, acted as resistance again, broke down, resistance again, finally broke above, came back down, support, then broke down again, back up, resistance, broke above, support, and then took off. Came back down, support here, came back down again, support here. So that's a very relevant zone, guys. If price, and this is why I would expect this to act as resistance, if this is a bull trap, this is where the reversal. If it does break up and we break above 57.75, it's going to be a very bullish sign of strength, in my opinion, guys. And at that point, I will start to think that maybe the bulls, or at least in the short term, are going to pull off a little bit of a rally and try to retake some of that ground. But until we break above 57.75, guys, the bears are still in full control, in my opinion. To the downside, what I'm going to be watching for is a possible excuse me, guys, possible stop hunt for longs. So in other words, if they drive price down, of course, they may be looking for a stop hunt. I think longs have a lot of them have positioned their stop losses right below this wick here at about 52.83. Also, possibly some of them have placed their stop losses at about 5,200. So I think if it is a possible bear trap, market makers might drive price down to at least 5290, 5300, somewhere thereabouts, to try to liquidate some of those or hit some of the stop losses in some of those long positions, possibly as low as 5200. This would be the bottom. If this is a bear trap, this would be the bottom at 5,200, where I'd expect a reversal. So come back down, hit that zone, and reverse course, and then bring price right back up. That's a real possibility, and we'll have to wait and see. And I think they're going to wait and see to see how price reacts if and when they do drop price back down, if that does end up happening. If we break below 5,200, and close below there, guys, I think there's a very good chance, as I told you last time, that we're dropping all the way down to 4,600, and I think that could happen very, very, very quickly if that does happen, at least 4,600, I should say. Then this is the zone between 4,600 and 4,100, if you missed my last video, that I've got buy orders sitting at. Doesn't mean that this is going to be the bottom, just means that this is where I would in my personal opinion, not financial advice at all, but this is a good area to dollar cost average in. Now you can dollar cost average in up here. I would just go very, very light, very, very light. Nothing heavy at all, but I'd go a little heavier between 4,600 and 4,100. This is a very good buy zone in my opinion. A lot of people disagree. A lot of people think it's going to go even lower than that. If it does, I'm going to have fiat on the side. I certainly will not go all in here. I will absolutely have fiat on the side. I think an absolute bottom will be about this $3,000 zone here. That's been a very relevant zone. We can see it was a resistance here in the past, was support here after that. It's an extremely relevant zone. It's also, for many reasons, which I'm not going to dive into here. If you break out your Elliott hat, we can see 3,000 is a very, very relevant target. So yeah, 3,000 certainly could, we certainly could see it going that low. But again, guys, I think that fear is going to take over and everyone's going to be out of the market by 46 to 4,100. And I think that market makers very likely, or smart money very likely, will come in and scoop it up at that point. I'm not saying it's going to happen, just think that's a very real possibility. And whether or not price is going to break up or down, which is the more probable, I think probability is very much in favor of the bears right now. And I hate to say that, guys. You guys know that I'm a bull at heart, but I think the probability tells me even if this thing does break up, it might break up, hit that 57.75 resistance, and break right back down and come back down to that 4,600. I do think that the probability is on the bears side for now, and I will think that until I see something different. So again, be very, very cautious. If you're not a day trader and/or swing trader, I'd just be out of the market. Certainly, if you have long-term holds, this is not the time to sell your long-term hold, guys. I do think this time next year, Bitcoin is going to be at all-time highs. So if you can wait this out, by all means, that's what you should do. I mean, if you have money in a long-term hold, that's what it's for, to hold for the long term. So I'm not suggesting you sell at this point, even though I'm saying probability tells us we're coming down here. It could very well go up. If anything else, this is certainly a very unpredictable, non-traditional market. A very new market, guys. Very new market. Makes it very hard to analyze. So certainly if you've got your long-term hold portfolio, I would just hold it. And this time next year, even if we come much lower, you're going to be sitting fine this time next year. I would not necessarily, though, enter into any new positions at this point until we do have a new pattern established. And I do think right now the way this thing breaks and how it reacts at that break is going to be very telling. A very strong rejection off of 57.75 is going to be extremely bearish. A break above 57.75 with consolidation is going to be very bullish. And of course, if we do end up breaking down very quickly, we could see this thing break back down, wick into this zone between 4,600 and 4,100. That be the low. We'll know it by a very strong wick and have a very strong reversal, and this thing could just take off. That's a very real possibility, guys. Remember, we need some kind of catalyst for a bull run to happen. If that happens to be in the form of positive news coming out from the SEC on ETF approval or mass adoption by Amazon or something along those lines, guys, we need some kind of catalyst. It's not just going to turn around and happen for no reason right here. With barring any kind of bullish news like that, the only other catalyst would be for price to drop low enough to bring in institutional money or excuse me, not institutional money, but retail investors, to bring in that flood of retail investors that we saw at the end of 2017. But until that happens, guys, and you'll know that's happening, we can see volume is at 4.5 billion right now. That's extremely low volume, guys. That's high. That means this market can be easily manipulated. So until we see that volume above 10 billion per day on a daily basis, this thing's not going anywhere. You'll know that new money has not entered into the market. Looking at, very quickly, guys, and then I'm going to wrap things up here, looking at our moving averages. This is on the 4-hour. Obviously, we've been unable to break up above this 8-day EMA. It's a very, very bearish sign, guys. We can see the Bollinger Bands. Obviously, we had a massive breakdown, guys. I told you guys they were squeezing up here to expect a major move. We saw that major move, and now we're seeing the Bollinger Bands start to constrict again very, very quickly, all suggesting another move to come here very, very soon. I'm not saying that's going to happen, just saying probability tells us that it is going to happen. You'll have to wait and see kind of how this ends up playing out. But if we can get a decisive break, at least above the 21-day EMA on the 4-hour chart, guys, that obviously would be a good sign of strength. I don't see that happening, though, guys. As I said, I think probability tells us that this thing is going to possibly break up, but then turn right back around and break right back down. Doesn't mean that's going to happen. Just means probability is in favor of the bears right now. I don't mean to be the bearer of bad news. I'm a bull at heart. You guys know that, but I always want to be 100% honest with you. And I could be wrong here, guys. I certainly could be wrong here, but probability, guys, tells me that we're going to come down and at least test this bottom of this wick right right here at 5,200, possibly come down and test if that breaks down 4,600 to 4,100, this zone down here. So I'm going to go ahead and wrap things up here, guys. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, would appreciate an upvote if you have enjoyed this content. Until next time, guys, please trade safe, take care of yourselves. This is Workin, signing out.